Hello everyone, this is Ashish with Investor Friendly CPA. This is going to be a long video because we will talk about LLCs and all the entity structure topics that might help you set up your entities when you start. Now remember, this is not supposed to be comprehensive to fit your needs. A lot of people do not understand how and when they should get an LLC. So that's what I'm trying to cover in a very brief and general manner, so that everyone can benefit from this. If you need any specific guidance, you need to reach out to your own tax advisor, okay? So I'm going to share my screen, guys, because this does require a lot of information here. So here you go. So when I'm sharing my screen is our tax planning module. If you guys have not seen this before, I'm just going to show you this. We have extremely comprehensive tax planning where we talk about a lot of things, okay? When I say a lot of things, you can see my screen. The basic planning, entity structure, setting primary residence to your S corporations, oil and gas, non-real estate tax savings, entity structuring, which we are talking about right now, retirement accounts, S corporation analysis, C corporation analysis, tax savings at the individual level, medical expense, how to write off medical expense, which are normally you cannot write off, all the deductions you can take, buying an auto, hiring kids, investment credits, buying a business, so many things, okay? We do charge a lot of money for this, but here's the thing. This is what I'm going to talk about today. So normally in our tax planning, what we do is we current entity structure and we walk you through how you understand this concept. How can individual own all the entities together like this? I have another video you can watch which explains this in 15 minutes. I'm not going to go over that today. The only thing I want you guys to take away from this specific screen is one thing. And what's one thing? Let me make myself bigger because a lot of people miss this. Do you see this multi-member LLC? And what green and red means is green means you don't have to file a tax return. Red means you have to file a tax return. When you have a spousal business, try avoid getting the multi-member LLC or getting a partnership. If you have a multi-member LLC, it gets taxed as a partnership. It's a separate tax filing. Red needs a separate tax return. We charge people $3,000 to file partnership tax return. You don't want that. You just lose money. Not needed. There's no tax savings, especially in rental real estate. If we are talking about non-rental real estate, then the multi-member LLC can save you taxes but we do specialize in real estate, so I'm not going over there. If you have, let's say, a food truck and your spouse is already making over FICA tax limit, then this might make sense. You do need to talk to your tax advisor so they can advise you. I have written everything I'm saying in here, and you can also watch the video. Only one thing I want you to take away from this is multi-member LLC do not get for your spousal relationship when you are trying to invest in stuff. We do a separate analysis for S corporation. We do separate analysis for C corporations. I will put on another video for those. That's not the purpose of this call. Now, what we do next is we walk you through the actual entity structure. We talk about all of this and we tell you, hey, look at this. How do you structure your entity? That's what we're going to talk about today. I'm going to divide this up between two portions. Okay, first portion I'm going to talk about holding company, how we're going to hold everything on the top. Second, we're going to talk about actual activity that we're going to talk about. So I hope everyone has heard about holding companies and being anonymous to save your name in the legal lawsuits and stuff. That's what the holding company mostly is for, and for a better organization of your assets and your investments. Again, it's going to get complicated, so I'm going to slow down. I do speak fast. Holding company and everything you see on here, it's green, is not saving you any extra tax. And you'll see this at the bottom. What I want you guys to focus on is, why do I have a living trust in here? That's the only one big thing I want you guys to take away. If I remove living trust from here, and then you guys, both you and your spouse, hold the company together, this becomes a red, multi-member. Right? Multi-member, like I said before, needs to file a tax return. You don't want that. That is why whenever you're married and your spouse wants to be a part of your business, normally they do, because for the various personal reasons, you can get a living trust, which is a piece of paper. You don't even have to file that with the state, and then the trust can own the holding company. Same tax benefit, everything is same, but this will now prevent you from filing extra tax return and saving money. The green does not save you any taxes. However, if you could get the living trust, what happens is, and something happens to you and your spouse remarries and the other new stepdad, stepmom is in a crook, and they want to sell everything that you go on and take the money, they can. But if you have a living trust, they cannot. You can direct the investments into your kids and your existing spouses and your parents, okay? Again, legal talk to an attorney about that. From tax perspective, doesn't save any taxes. It's mostly one reason for living trust is to have a holding company as a single member LLC. Once you understand that, I have a branding LLC and property management LLC. I will not go over branding LLC on this video. I will go over property management and when you need that. Now let's divide this up between few things. Let's say you get a holding company and you're going to own all of this. These are all your operations in your business. First, let's get rid of things that not everyone has. Not everyone's going to invest in a fund and syndication. If you do, yeah, go ahead and invest through your holding company. You have a holding company, own the investments and get another single member LLC on multiple interests. You can always do that. Remember, green does not require any tax filing, federal level, and also no tax savings. So even if you don't get this single member LLC that I'm pointing out, you can directly hold this to a holding company or even your trust or even your name if you don't have a holding company. Okay, you can get rid of both of these and directly own these LLCs, and it's still same tax impact. So this, we talked about it. Rental own in partnership. Let's talk about this. You talking with your colleagues, your friends, your siblings, and you want to buy a property together, same concept, okay? But business kind of goes here and here, like a non-rental business. This is mostly for real estate. That's why we have a partnership. Partnership and S-Corps are different. S-Corp can save you taxes on other businesses, and we will get there in the next few minutes. This is where I want you guys to focus on. When you and remember, I told you before, when two people get an asset together, or business together, it is taxed as a partnership. It's red. So this is where you want a partnership. Your investor and you will come together and get a LLC or general partnership. Remember, LLC is not what determines if you need to file a tax return. As soon as you shake hand and open up a business, it's a partnership. Getting an LLC just legalizes it, right? So let's say you get an LLC with your investor, multiple other LLCs below that holding partnership LLC, so you don't have to file 100 different tax returns with the same partner. So what am I saying here? I know this is complicated. Just hear me out. If you guys have one partner and you're buying properties in multiple states, opening a multiple franchise in multiple states, do not get this level partnership. Always get single member below the original partnership, top tier. If you get 100 of these, you have to file 100 different tax returns. If you get one of these and have 100 single member LLC below your multi-member on the top, you only file one tax return, even though you might have 100 tax returns. So I know it's a lot of information, but I hope you guys understand what I'm saying. Again, talk to your advisor before creating any of these. We go through all of this with our clients, and they still need to send us their lawyer prepared entity structure before they can sign off. And I suggest the same thing for you guys. Please always have your CPAs sign off on a tax efficient entity structure. We covered these two. Let's cover our rental real estate. I have multiple other videos explaining, do you even need an LLC for your rental? Please watch that. Look at this. We're talking about green. Everything is green, meaning there's no tax savings from LLC. There are other reasons you might need one, and my other videos talks about that. But even if you don't get any LLCs for your rental, you still have a same tax benefit or same tax implications. But for legal reasons, your attorney might suggest this, right? And they might suggest this as, hey, you might hold one property per single member LLC or 10 properties. It really depends on your legal needs. So please talk to them and you should be fine. But I just want to show you how to organize this. Your holding company owns your rental holding company and bunch of this stuff here, right? This is where the property management comes into play. As you scale up, let's say you have 100 different LLCs below, 20 different LLCs below. Each LLC needs to open a bank account, credit card, debit card, and you go to Home Depot to buy some TVs for your properties or landscaping. Are you going to go to 100 different credit cards? No. As you grow, operationally, what you want to do is you want to get a property management entity that handles all of that for you. And it also helps you from a legal perspective, okay? Property management doesn't own any assets. If someone sues property manager, it loses nothing. Talk to your attorney about that, but understand from operational perspective too, it makes a lot of more sense. One property management pays all the mortgage, pays all the expenses, pays everything, and your bookkeeper will go and organize them by property so you can analyze the performance of your assets, right? That's where the property management comes into play. You can get the property management in this fashion. Your holding company can own one. or directly, it can be owned directly by your name, your spouse's name, your trust name, anything, okay? That doesn't really make a tax difference. It's green. Green has no tax savings. I don't know if you have watched our other videos about HRAs and how to write off a medical expense. It might be a good way. You can hire your spouse here and have all the medical expenses written up from here. Again, another video for that. You can watch that. We talk about all of this, right? Let's talk about this. When do you need an S corporation? We do a detailed analysis. Let me just walk you guys through this. So we do a detailed analysis of when you need an S corporation. Again, extremely complicated calculation, which factors in your paying your spouses, all your retirement accounts, how much you can save with the retirement accounts, are you doing cost segregation, your rental properties, everything factored in to figure out if you need an S corporation or not. So do not just get an S corporation. It's not good for real estate, first of all. Never get an S corporation for real estate. There's another video you can watch for that again. But right here, what I'm going to show you is once you determine that you need S corporation, this is how you're going to structure it. Your S Corp is going to own non-passive businesses, okay? 1099 gigs, retail, Amazon, restaurant, food truck. You want to start doing Ubering. Doesn't really matter. Anything you do, OnlyFans. People do that. I have clients who do that. S corporations. Your S Corp is going to own other single member LLCs. You can have multiple activities on the same S corporation if your attorney advises so. Being a real estate agent, being you wholesaling property, flipping a property, developing a property, right? You have a restaurant, please, your S Corp owns that. It can save you taxes. If someone comes to you and wants to do a partnership on a non-passive business, not rental. When it's rental, you're going to go up here. But non-passive, your S Corp is going to be a partner for this flip, and your other partner is going to come in like this, and this becomes red. As soon as two people come together, it becomes red. S Corp, even though you have one spouse, it becomes red. So why do you need an S corporation on the top? Why can't let's say you flip a property with your partner, and this is very important, guys. If you guys have not understood anything else, understand this. If you guys flip a property together with another partner, and the partner asks, so do we convert this flip LLC partnership to a S Corp? Say no. Have your own S corporation. Because if you want to write off a vehicle or you hire your spouse or kids and you do that in this S corporation, if you elect one, your partner also gets a tax benefit of your expenses. You want all your tax benefit for yourself, get this structure. It's a little more complicated than that. Please talk to your tax advisor. Now, the next step is if you're sponsoring a fund and all those things. I'm not going to go over those. That's more complicated. This would be enough for you guys to get started. Talk to your tax advisor. This is complicated, guys. I'm sorry for the long video, but hopefully this helps you. If you need this kind of information, follow us on our social media, and you guys will keep on receiving this. Thank you.